Well, I guess that's it. Where we are, like live for our first enterprise on Ethereum live by the enterprise by the EA. Thank you all of you for joining us today for that first streaming. I'm very excited for like the panel that we have. So we have like Nethermind, Polygon, and Metasig today. We're gonna chat a little bit about institution. The format is I'm going to introduce you a little bit. Also want to give you an opportunity to present who you are, but also then I have like a few questions, but really exchanging about the current state of like the market and what the institutional adoption looks from like the different angles that you would have. I think you're all doing some very, very cool things for adoption and especially for enterprise adoption. I think I will start with Nethermind, pretty exciting company. For those who don't know, like Nethermind is like originally like an execution client for Ethereum. And so I would have to check, but it's probably like 20 to 30% of the Ethereum network is actually running the software that Nethermind is building. It's been, but also like much more like Nitin is going to be able to share with us. Polygon has been also like a very long time, part of the Ethereum ecosystem. But now, like, I think the last month you have like a pretty exciting news, between like the acquisition of CoinMe, I think today also with Apex and the partnership that you announced with Apex, I think those are pretty big. So we'll have like Maria and Jamal to share more details about this. And also special thanks for Luke tuning in from New Zealand. I don't know, it must be like 4 a.m. over there, something like that. And with Metasig. But I think without any further ado, I will first like give you like each of you a little time if you could introduce yourself so anyone can know a little bit like who you are, what your role in the company, and if you want to add some few words about it. I think I'll start with you, Luke. If you could like introduce you to her and share what Metasig is doing. Thank you.
Sure. So, yeah, I'm Luke, co-founder of Metasig, currently in New Zealand. The sun, it's actually only 7 in the morning, so the sun will rise behind me. And what we're doing is we're building wallet infrastructure, and we're looking at that gap between retail and enterprise, and how we can bring a solution to the market that gives that's secure, but at the same time can actually provide teams with the tools they need so they know what they're approving. So I know we'll go into this a bit more, but that's why we're here.
Thank you. Now, like, I think I met you maybe like about a year ago. It was in East Denver, I think.
Yes.
And I remember like you had like at that time like that pilot with I think the MAS that you've been part, and I think it was a pretty exciting. You have like a whole demo that actually we can see online of like how your product is doing like everything end to end. I will share that after, but I think it's a super exciting thing to see. Nitin, today I won't take any of your tax advices.
Okay. Thank you, Edwan, for that. And there's an internal joke which we can discuss a bit later. My name is Nitin, and I represent as a head of institution at Nethermind. I recently joined the firm. The DNA of Nethermind, as Edwan mentioned, 29% of the client is sort of is Nethermind client on the entire Ethereum network. But besides that, I think a lot of work has gone from the firm in areas of zero knowledge proof, in privacy preservation, in working with DeFi protocols, and bringing the post-quantum cryptography to market. And in the new sort of area, which is where I'm leading, is bringing some of that technology in a regulated and compliant manner to institutions. My background: I founded blockchain labs at IBM. This is back in 2014. Worked with capital markets. Joined State Street after IBM as head of as a head of digital assets. And the role there I had was to essentially what school today, which is stablecoin money market funds, is understand the mid office, back office processing and integration of that in existing financial system. And after which I'm a senior advisor to many large financial institutions. And in the last 4 months, I've been heads down at Nethermind to bring this amazing tech, amazing engineering sort of work that Nethermind has done to institutions. So with that, looking for this conversation, and I'll pass it back on to you, everyone.
No, thank you. Yeah, like Nethermind, I started my career in crypto actually working for ChainSafe, and they do a consensus client called like Lodestar. And so the the work of those teams and how this is being distributed is quite remarkable. That's something probably we'll go over on another streaming, but I think it's pretty fantastic. And I would say having you joining a team like Nethermind is a beautiful and very strong signal about like actually how Ethereum in general is really going full blown on institutional adoption. I know there've been a lot of sometime talks, and I think it's probably more noise than anything on the social media related to the new mandate of the eea-eth. But I think when you look at what organization like yours and some other, like even Polygon that we're gonna go after do, like the Ethereum ecosystem as a whole is really moving toward like adoption, and there is really like some things happening and coordination happening. So I thought you wanted to add something, Nitin, but
no.
Otherwise, I'll pass on to you, Maria. Also like tuning in from New York. We met like a couple of months ago at a dinner that we were organizing in New York, and I'm super happy to have you today. If you could also like share like an introduction about your role at Polygon, some few words about Polygon, and I'll pass on also to Jamal.
Yeah, thanks for that. Nice to be here with everyone. I'm Maria. I'm head of investor relations, and I work on market structure stuff here at Polygon. My background is a trader starting on a repo desk and then moving quickly into energies and then HFT. If you've read the book Flash Boys, that's where I made my claim to fame, and then did an exodus along with many traders of that day into crypto. So came in early, set up a BTC long fund, managed that for quite some time, and then took it down with Mt. Gox. And then have just been like a serial founder and contributor to some kind of frontier projects ever since. In the cryptoverse, I was at Ripple for a few years, leading kind of their institutional strategy before joining Polygon to kind of help everyone here reframe their business and take us into kind of this new era of institutional money movement on chain.
Okay. Wow. Thank you. Indeed. Also, I'll pass on to you, Jamal. We were I met Jamal last year. We went to New Orleans together, not for the gumbo, but for like the ACH conference, which is the automatic clearinghouse.
I tried gator feet for the first time with you, or something crazy. I don't remember.
Yeah. Yes.
What is that?
That was a pretty good restaurant where we went like over there, like the.
But it was an experience. Yeah, no, it's good to see you again. Thanks for having me. I'm Jamal. I lead our strategy team at Polygon. When I'm not getting coffee and helping Maria spend her billions, I am helping our strategy team ideate on cool products that we build, cool relationships that we have, some stuff that we do on the external side as well. I've been at Polygon actually just about the same time as Maria for about a year. Before this, I was one of the first employees at Bridge, helped join before they launched their product and got them off the ground to over $1 billion in TPV in a deal with Stripe. Before that was at a company called Wire, which was one of the first fiat on-ramps in the space, started in 2012. Was there for about 4 years before we ended up selling that business as well. Before that was at Square and Cash App, leading some of the debit card partnerships, more on on and off ramps into the Cash App ecosystem, but a little bit on the crypto treasury product. And then before that was the head of BD at a company called BitPay from 2016 to 2020, where I launched the first crypto debit card ever with Visa, launched the first MasterCard debit card again in 2019, got some of the earliest crypto licenses, worked on some of the largest kind of enterprise crypto deals, especially involving cross-border payments and stablecoins early on. But yeah, definitely a big crypto payment start. Excited to be here.
Okay.
I will say that my very first conversation with Jamal was rather confrontational and about agentic commerce, and we can get into that at some point today.
100% true. Yeah. Well, yeah, 100%. In Cabo, Mexico, which was a great place to do it. But yeah.
I mean, agentic is a pretty hot topic right now. Like I was in San Francisco last week for the eea-eth, and they were doing use case lab, and there is definitely a lot of things going on. I think pretty exciting around agentic, and probably I'm curious to see how this is gonna evolve. The connection between the ecosystem and agent payment. I think there's gonna be a lot of new businesses or new things to actually do stuff.
Yeah, I agree. Jamal's on the other side of this argument, so we'll get into all of it.
I'm just waiting to see more traction in use cases. I'm very bullish long term for sure, but we're pro agentic commerce for sure.
I guess maybe I'll start with you. Like, since we're on Polygon, I think for the last 3 months, like, you have some pretty big news, and so you've been always very like at the forefront, I think, of like everything institutional based. You know, you acquire, I think, CoinMe early January, which is like has like 48 payments. Network in 48 states in the US, right?
Yes.
Today you announced like a collaboration with Apex and ERC-3643. I'll be curious to have like your outlook on the current like state of adoption, and how enterprise institutions are looking, at blockchain in the Ethereum ecosystem.
Yeah, I think the Apex stuff is really exciting. Maybe, I don't know, Maria, if you want to start with that, or I could start with CoinMe.
Yeah, no, I'll start with Apex because I think there's like a lot to get in on here. Look, I think the reality is that there is broad scale interest to moving kind of capital assets and all sorts of stuff on chain. Like, we've had this conversation, everyone's aware. We don't have to keep validating that point. That's just fact now, right? But the truth is, it's broken, right? The more institutions come on chain, the more liquidity gets fragmented, the more kind of the tech stack gets fragmented. We've all been, this whole group has been in technology for a long time. So we've seen kind of how different operating systems cannot interact with each other, and it becomes a bit of a mess, right? And so, our viewpoint is that there has to be a clear interop layer, so everything can be consistently connected across like different fragmented liquidity pools, different asset pools, different issuer pools, things like this. And once that fragmentation or that mosaic kind of comes together, you can then actually start monetizing, right? Like moving assets from one ecosystem to the other, and then collateralizing them and leveraging them and things like this. And you can actually have an economy that functions, not just these like piecemeal onesie, twosies that are coming to market. So that's what we're trying to do here with our partnership with Tokeny and Apex to really bring T-Rex chain to market. We are going to be the operating system for monetization for RWA, period, right? All of the other stuff that people are doing, it all should exist and will continue to exist. But to the extent that they want to actually make RWAs efficient and make them flow and capital flow, T-Rex is kind of your home base. So partnering with Apex upfront was a key part of this narrative. They're managing over 3.5 trillion in asset service. As those assets become on chain, it doesn't become like a race for TVL, because I think that's like been proven that it doesn't really move the needle in the long run, TVL chasing. I think what moves the chasing is actually liquidity and assets on chain. And so that's what we're targeting, and we're coming out of gates really strong with that, with this T-Rex project.
And I guess to like piggyback off that, as like you see this kind of like middle layer forming out as like T-Rex and other maybe CDK projects and maybe other Polygon-based projects building this like new financial operating system in the middle. We have obviously a high throughput layer underneath it with Polygon as the network that powers it with the technology and the scalable infrastructure. The one thing that we noticed we needed was regulated on and off ramps to that ecosystem, right? You can have the best playground in the world, and if you can't get people in and out of that ecosystem really, really effectively, then you're not going to get adoption and you're not going to get usage. So to that extent, we were looking in the market for, a solution that covered all of the, the global payments infrastructures that we wanted, and we wanted to bring it in-house. And we really found that there was no like global provider. And then maybe about 6 months ago, probably about 6 to 8 months ago, we realized that like this just needs to be built in-house. So we looked in the market, we looked at companies that we had a partnership with already. We found CoinMe, which has been around since 2012, one of the oldest payment partners in the space. They've spent the last like decade building out all of the regulatory like guts that you need to be able to operate this business, as well as the payment rails. Not only like institutional grade payment rails, like what Maria and T-Rex and some of these other institutional partners need, like with wire transfers that are very cost effective, that can be global, that can settle very quickly, that settle to named accounts that are very effectively spun up. Like not only that institutional grade infrastructure, but also like something for the retail folks, right? So we also have the ability to accept cards very effectively, very quickly. We have cash locations in over 50,000 locations. Truly, like, this new financial operating system that Maria and team and all of us are working on should be available to the common person as well. So we want to be able to open up all of those rails and lead that to this like next generation infrastructure that we're building that is truly enterprise grade, but is democratized to everyone that's building on it. We also did another acquisition, by the way. So we did acquire CoinMe, but we also acquired a company called Sequence that provides some of the best-in-class wallet infrastructure and cross-chain interoperability that we need to be able to service this as well. Because T-Rex is the first example of this, but like, we believe the future is going to be multi-chain. We believe all the chains that you see today have a lot of value, and they're going to be purpose-built and driven to specific niches. And we want to support interop and Rails and infrastructure across all.
Wow, that's something super exciting, because I'd say like I feel like there've been like a switch in the narrative, you know, like where like really you've been championing like that multi-chain approach at Polygon for a couple of months. I think it's super exciting. You know, I was talking also to some other people at say, hey, we want to make the ecosystem win, and how we can work together. And I think that's pretty exciting. I was seeing like Luke actually, you know, shaking your head. And I remember when I met you like a year ago, what I really loved about MetaSig is really like having that completely vertical, you know, approach where you really handle everything, which I feel is also a little bit similar with what Polygon is doing at a different scale, you know, with acquisition and building, you know, like the whole stack. So I'm curious, you know, like after what they said, there is something also like that. Would that inspire you?
Yeah, I definitely build on that fragmented challenge that's in the market. And what we did, so we had a couple of, basically we said, how do teams work in crypto? And we kind of really just did a lot of deep dives with treasuries and just how they do it today. And I think everyone can probably say there's some challenges there. What we found generally was a number of people and signers in a group referred to the technical person. Now that obviously has risk. So we really went to the drawing board, and then we said, well, how do teams transfer Bitcoin? Because anyone with the technical knowledge knows that doing any multi-sigs with Bitcoin is, let's just say, is an intimate process, and it's really just not good enough. So what we did is we went right back to the cryptography, and we said, can we just have one place to do everything? Can we remove all the servers from the process? And then can we actually put it in a way that all the signers in a group actually know what they're doing? So if I'm, you know, so my background, I'm a chartered accountant. I want to know what I'm moving an asset from A to B. I want to know what I'm doing. I don't want to see zeros. I don't want to see ones. I want to see I'm transferring an asset. Where's it going from? You know, and where is it going to? That's all I want to see as an approver. So that was our challenge. And what it took is 3 years of writing cryptography, 3 years of people telling us their problems, and then really getting to the point where all someone wants is one place to do this, but they also want to make sure that it's very secure. So we've really got to a point where, and also the other challenge is they don't want to wait too long. So if I'm going to set up a new account, I don't want to wait weeks. I want it to be done generally in hours, maybe even in minutes. So we got into this frame of how do crypto teams work today and how will they work tomorrow? And it really is around, we've come to the point is they want to make sure that it's done securely and that they don't do something wrong. Everyone's got this absolute fear of accidentally transferring something wrong. And as the zeros go up, the fear goes up. And that's just, and I have that myself. So that's really what we put a lot of time in. I won't go too deep, but the agentic, absolutely, we believe that it can be done securely. And that's something that we're building into our product. And the other part that we are actually looking at is we also need secure encrypted messaging in our apps, because a lot of people are transferring assets from A to B and putting all the detail in Telegram. Right? So the question I asked actually, and I don't know, and we've got some really great people here, is why don't we have encrypted messaging in our wallet stacks? And the issue is, and please correct me, is because of the cryptography. So we built that in because we've built the stack and we've had the architecture. So basically, my belief is the issue that we've got, one of the issues, is that the architecture of what we've created many years ago doesn't fit what we need today. So we just need to change that slightly, make it more secure, make it, post-quantum. And then as we bring this to market, we'll start to get more adoption, because I think we all want more adoption, and we want people to come to the network, but we also want them to come to the network securely. So that's really been our North Star of what we've been building at Metasig.
Okay, wow.
Interesting.
And well, I guess, and you have a product, like, is this accessible for everyone also, like Metasig? Like, is this like,
so we're in a private, private beta, Edwin. Yeah, so basically we're on mainnet, private beta, and we're playing with it now. People are moving around Bitcoin, because Bitcoin's the hardest thing. I mean, when I work with the engineering team, if I want to give them pain, I tell them, hey, can you do a multi-sig for Bitcoin? And by the way, can you abstract everything away so we don't want gas fees? Because what enterprise wants gas fees? They don't. They just don't want gas fees. So, and then, oh, well, can we change the Bitcoin amount? And then as soon as you go to someone that's on the tech level, they'll just kind of want to throw something at you when you ask for these type of things. So we've gone through this pain around, looking at some of the Bitcoin stack, because everyone knows as a first kind of beachhead, and then dropping into EVM obviously is quite good. And also we have the ability to deploy into private chains as well. So we've got to the point where we knew that if we need to add a new chain to our product, it should only take days, because if it takes any longer, enterprise won't deal with that. And coming from if I'm sitting on the other side of a client and they're saying, I've got 3 chains, I need you to add this because we've got this business reason. If I come back to them and say, yeah, there'll be 3 months, that's not going to work. So that's something that we built into the architecture as we were doing this.
Wow. Okay. I guess, Nitin, I'm pretty sure you have a lot to say.
Well, I do. And I think, Luke, you're spot on. I think, and I wrote a bunch of articles on this topic where the wallet share is mind share, and we begin to build this on Web 2, Web 3 narratives. And the fact that messaging, as treated as a separate protocol, which in financial system, if you look at the entire financial system, runs on messaging protocols, right? All the stuff that we do with ISO 20022, all the old MT standards, there are whole back office systems, which is essentially what I think Maria, had a brilliant description of this. Essentially, building this compliant layer that they're looking into is essentially the back office function of the fund accounting, administration, everything else. These are all driven by messaging. So when you bring up this narrative around the walleting, which was primarily an accounting construct and ownership construct, to transform that enterprise perspective, messaging was implied in that cases. But so there's a little mismatch between Web 2 and Web 3 narratives in this, in the context. But I'll give one perspective, which I think to build upon what Jamal and Maria mentioned, which I think is brilliant work, guys. I think I've been at this now for over a decade, where the industry pays a reconciliation tax. The reason why industry is slow in transferring asset is because there's a slew of market structure, and eventually it converges into the real ownership right. So if the moment you place a trade and the trade execution happens and eventually ownership changes, that entire process goes through a complex set of financial market infrastructure. So the primary transmission mechanism is market infrastructure. This is how we transmit our messaging systems. And when we bring something like blockchain to that party, you're really modernizing the transmission mechanism to near real-time, vehicles. And so at that point, the old systems, the old market participants, which make up the market structure, still has to keep up with that synchronization of those, of this movement of assets. So this reconciliation tax that we pay is where my focus has been, is what can we do? And blockchains are ledgers, but they're not accounting systems, right? And so I think the work that, that Polygon has done recently, or at least this announcement, is to me a vehicle to say, can I do real-time realization of the change in ownership, which today has to wait till end of day process to reconcile. And so at Nethermind, like my primary focus institution has been, and I recently published a paper on this topic, is what can regulated financial institutions do to safely engage with public infrastructures, right? So we have fundamentally changed the way we process transactions from a core banking, core equity systems to blockchain systems. And if blockchain systems became the transaction system in this public infrastructure, so things like legal finality, right? This transaction finality, it's a legal term that industry has to come to term with. And more importantly, in public infrastructure, you have less control, which the FFIEC, the IOSCOs, and the entire global regulatory bodies have set forth a standard, and we have to adapt to that standard. And so what we are trying to bring us from an institutional perspective is, what can institutions do to engage? And to that point, Luke, using some of the technical elements that you're talking about, bring that to bear. Bring that to bear in terms of the impeding elements around post-quantum cryptography, which is a generic problem, not just a blockchain problem. In fact, it's a bigger problem in the existing financial system. And then eventually taking some of the stuff that Maria and Jamal talked about is integrating with this as a compliance sort of coordination layer, which is what the attempt has been in this recent announcement from what they've done. I think all this is a signal that we are collectively trying to serve the industry to bring those transactions, the institutional, the 600 trillion plus economic imperative that's globally there, to bring them on chain in a safe, compliant manner. I'll pause here, Edwan, at the risk of not just having, hogging the time, and pass it back on to see if that even makes sense.
I love listening to you. And please, guys, I want this to be like we're not in the same room having a coffee or like some drinks, but I want you to feel free to actually exchange with each other, because I'm pretty sure you can have some question, and don't feel like I have to hold. I'm just here to set up the stage, make everyone chat, but I think you have a lot of very interesting things to say. So just feel free to jump in. I have a question for you though, Nitin, because I think in regards to what Luke and Maria and Jamal has been saying, I'm curious to know what's the place of a protocol, as Nethermind into that race of adoption.
Yeah,
because
that's a great.
It's historically very it doesn't have the culture of monetization and how institutional adoption. So I'm curious, how you approach this, being part of Nethermind.
Though I would imagine that protocols were all about monetization. At the end of the day, every protocol, whether it's data availability layer or coordination layer or any layer, was all about monetization. But there are a few things, right? One is we provide access from a Nethermind client perspective to the blockchain infrastructure. So there's sequencing. There's a whole way of how we process transaction. And this is again in the theme of submitting transaction, eventually going through the proposer builder sort of model that goes through it. From institutional perspective, well, all that is great, because at the end of the day, using the public infrastructure has 80% cost reduction. And I did this experiment, and am I still in the air? Because
you're back.
Oh, back. Okay, got it. And so we did this work where you could build the same infrastructure in this permission world. I think the permission private debate is over, but building the same infrastructure that we have today, it's about 80% more expensive than using public infrastructure, both in terms of software development, software deployment. And so in that context, that's attractive. But if I submit transactions, I still want to have control in who can validate that. So we have OFAC, we have sanctions. And so the ability for us to be able to include those transactions, only allowing certain entities, whether it's institutional clients, to validate transactions, is something that sequences can control and should control at some level to adhere to, if we want all the $600 trillion worth of assets to come on chain and resulting transaction that's being processed. And so I believe that some of the work we're doing in that context, privacy preservation, we did some recent work with Stellar, which is essentially the thesis of moving an asset versus keeping an asset in one chain and just moving its state to another chain without breaking the integrity of the asset. So we did this whole thing with zero-knowledge proof. We put the proof onto one chain to say the asset exists, whether it's collateral management or collateral locking. Those are use cases that are becoming much more relevant, because it's $25 trillion of collateral exchanges hands on a daily basis. And so that's where I think Nethermind can play a role of not just bringing the prowess of technology and what we have done in building protocol. Can we then pull institutional wrapper around it? Can we build, in my context, institutional DeFi protocols? I think Maria touched upon this early on, is whatever BlackRock has done with Uniswap X and bringing BUIDL to market, can we now put an institutional wrapper and engage in collateral management, engage in borrowing and lending and collateral management elements in the public sphere, while adhering to all the regulatory aspects of what the industry expects from us.
I'll kind of just add to this, because this is why this space is so exciting to me personally, right? Is that I didn't grow up here, right? I didn't grow up in US capital markets. I grew up in, an emerging market. And in that emerging market, people had very successful businesses, including my own family. And their challenge was not that, hey, I need to get my business now listed in a US exchange or any exchange, they had access to different stock exchanges around the world, right? The challenge was that in America, businesses have access to leverage capital and credit so they can scale their businesses, right? Like that is the thing that's missing. And so if I can take kind of my assets and then put them on chain into like a really nice like credit vault and like, you know, borrow against it, that's really a big unlock for me. The issuance part, the thing that everyone else has been kind of working on for the last like decade that hasn't really moved the needle significantly, is not really a big unlock for emerging markets. It definitely solves a lot of the settlement woes, Nitin, to your point, like the back office stuff, because like that's like such a big freaking mess. But from a front office perspective, it didn't really do anything. It didn't change anything, which is why we haven't seen the liquidity flows and, you know, the secondary movement that we all anticipating was going to happen, is because that part wasn't really broken, right? It was the back office that was broken, that became more efficient. We've seen that, that's done, right? Now, how do we actually create an economic flywheel on the front office? And that is a completely different problem set. That is nothing to do with issuance, right? So that's why like this DeFi unlock becomes super exciting for me, particularly with RWAs. Like if you could borrow against your treasuries, and I'm like teeing that up for Jamal because he has a whole thing on this, but like if you could borrow against your treasuries as a company, you can actually take assets that are just like kind of at rest typically, and give them some juice, like give them a purpose, right? Something that like we like to say at Polygon a lot is that your money, your assets get superpowers when they go on chain, right? Like that is like something that's very fundamental to what we're trying to do in the long tail. And I think people are missing the point by just thinking about issuance. Jamal.
No, I mean, I think you said it well. Like I like the part that attracted me to the chain in the first place is the part that I think that we haven't even gotten to, which is how do you like fully automate all financial services? Like the programmability of money has never really been explored at depth yet, if you ask me. Like getting to stable coins and doing simple transfers is like the first step. And then to Maria's point, like we're doing a little bit more on the trading and the like the institutional side. But I think that we are like scratching the surface as far as like what is truly possible when you can fully automate all aspects of your money. And I think that like the fact that the code is touching the money itself is where things get really crazy. Like, you know, to Maria's point, like yield in flight to subsidize things like FX or other costs, right? Or like being able to do instant settlements just because you can tie in different like liquidity sources and also different yield sources to subsidize different lending costs or whatever.
I'll say one thing, though, just for like over a decade, this programmable liquidity concept from this perspective. And I think one thing which I learned, and this is, you know, Maria, you came from Ripple, Ripple acquired G Treasury. I think it's velocity of money. As we all talk about instant or near real-time settlement. I don't think the treasury and cash management risk models are designed to absorb and understand the risk of the real-time settlement. And that's an impediment for the adoption of this programmable liquidity in many cases, or what we call liquidity engineering. So it's still tied to the financial market infrastructure, the clearing, the CSDs and CCPs, where the liquidity sort of aggregates. But I think the bigger challenge is the ability for these treasury management systems to keep up this 24/7 and velocity of money. I'd love to get your perspective on that, because it's not like the industry doesn't know. I don't think industry has a way to have a risk model that they can adopt, which means things like stop payments and make sure they have adequate liquidity for short-term commitments. Just a thought. I want to get your perspective.
I think you're right. I think like trying to go too broad too quickly will like lead to a very explosive outcome for sure. But I do think that there are very, very strong niches where there's just like, I mean, like, sorry for saying this, but like stupidity in the way that the current market is set up or the current infrastructure is set up. And that has led to an opportunity for someone to come in and financially monetize that gap. But even financially monetizing that gap allows for like a better experience. So like, I'll give you an example. Like it is like, in my opinion, not smart to like, or not smart that like, you know, Coinbase is processing, let's say, I don't know, $10 million of a card on Friday. and they don't receive their settlement until Monday, just because they're relying on archaic infrastructure that like requires manual reporting and bank hours and all this other stuff. And yes, I want that whole infrastructure to change. Yes, I think that the blockchain is a purpose-built financial infrastructure that's like better optimized for that whole thing. And I think that's the long-term solution. But we are a ways away from that. And in that gap, there's just an interesting intersection of how do we plug in just like really, really intelligent chain infrastructure to solve that gap temporarily? So like a couple ideas. Number one, there is the opportunity to do instant settlements and instant lending on the chain itself. So imagine I'm Coinbase, I process $10 million in my card processing on a Friday. I'm expected to receive a $10 million wire from the Visa MasterCard network from my acquirer or whatever on Monday. There is no reason why I can't go to the on-chain markets, be able to tokenize my settlement that I'm receiving on Monday, be able to give someone else the opportunity to lend me against that tokenized infrastructure and earn money off me paying a small amount, a democratized amount, to receive that settlement on a Tuesday or on a Saturday at 2 a.m. or whenever, or overnight, or on a holiday when the bank isn't working. That like level of programmability and that level of like intelligent blockchain infrastructure leveraging is us being creative and pragmatic about knowing when like Visa and MasterCard are going to change their systems to a blockchain-based system. And I'm not going to like hold my breath for that just quite yet. But like, how do we use the chain and some of the existing capital and infrastructure on the chain already today to make yield for investors, right? Like, because in my opinion, Visa and MasterCard settling on a Monday is a very, very safe counterparty. Whereas like, that's a very lucrative opportunity of yield. So anyway, the point I'm trying to make generally speaking is that there's all this programmable infrastructure at our disposal and capital and investors. And you have this like financial ecosystem building, and we are just scratching the surface on how to intelligently deploy that in payments related and markets related pain points while things get better on a longer macro scale to solve people's pain points today and bring this access to people where they need it today.
So, Jamal, if you and Maria had an argument on agentic commerce, just wait till we talk about agentic finance. That's a whole different thing.
Yeah. I'm not ready for that.
Look, I think the thing is like risk management's pretty shit off chain too. Right. So like for someone to sit there and be like, hey, like you can't program whatever, KYC AML efficiently. And so it's true. You can't, right? Like not today. But the truth is like the pace of innovation is tremendous and we're going to get there, right? And the off-chain way, like the traditional finance way, is completely shit. Like I'm not forget like macro capital markets flow, like how many times I've had a trade break or like DND or some shit like that because like I got like someone fat fingered their trading ID on the other side. Like that stuff happens. But even in a commerce perspective, like it's 2026, fraud is at an all-time high, right? The truth is like there is no way like traditional payment providers can keep up with the rate at which like people who are trying to be deviant in this space are really moving, right? Like they just can't keep up. There's like fraudulent payments are costing the industry billions of dollars, right? We have like stats on this that we talk about every day to our customers. And the truth is it becomes much more efficient to monitor those breaks on chain, right? And that's just the fact of it. So you can have like nuanced arguments about kind of the process in which that risk is managed, but programming that risk management makes it 10x more efficient than relying on a team of 30,000 people that are sitting all around the world that are reacting to things when they feel like it in between bathroom breaks and coffee breaks and all this shit, right? Like it's a broken system and we're fixing it.
Luke, what's your perspective on that?
Yeah, no, look, it's interesting, right? Like I like this because like one of the things that one of our big whys is security. Like we started Metasig because people were coming to us and they were losing money on chain, right? Not saying it again to Maria's point, there's fraud on both off and on. But where we got to is, well, first off, the tech should be able to protect the user as much as it can. I'm not saying it's 100%, but we as innovators can get better at providing tech that really helps users not make stupid mistakes, right? Because, you know, it happens. The other side is just understanding in the infrastructure, like we're, again, like when Jamal, you're talking about opportunities with finance to, you know, find gaps where you can generate, you know, put your assets to work. It's the same thing with security. Where are the gaps in the security when we're signing and moving assets and doing stuff with assets on chain? So I really believe that, yes, I completely agree with Maria's point. You can actually identify where it's going and you can see what's happening on a fraud standpoint, but also, you know, blind signing. I just don't know why we're doing that today. It's crazy. It does my head in. The other part is, and no offense to hardware wallets, but what the F, right? Like what? If I don't know if I can say to somebody who's moving $1 million on a hardware wallet, do you know what you're doing? I mean, do you know how to decrypt that code, that hash code?
So,
absolutely not. So then you got to ask yourself, well, why are we using them? You know, and then you go, okay, well, I'm going to go on a big enterprise platform. I'm going to go use
look,
that.
Isn't that like a retail? It's like a hardware wallet. In no institution today, like to Maria's point.
Okay. Yeah.
To her point, right?
Institutions are using hardware wallets on their multi-sigs.
Yeah, I feel like I hear of institutions hearing hardware wallets.
So okay, institution as a hedge fund versus institution versus Bank of New York Mellon.
Exchanges?
I don't think so.
Well, yeah.
Right. You know, 11,000 institutions with Coinbase. They're not like 4 people who hedge funds. They're classified institutions. But there's no institution that I know of that the one we really want to work with part of the market structure are using hardware wallets.
They are using it to sign. They're not using it to hold assets. So sorry, I had to so if we talk about signing and approving, then that's to me, that's the same thing, right? Like I'm still approving something and I'll move it from A to B. But then again, yep, go.
My ask was more towards not just the notion of signing or moving an asset. It was more towards Maria's point of the systemic risk. So every financial institution has a risk model framework. Every financial institution has 3 lines of defense. There are technology risk, operational risk, financial risks, and there are all these different risks, which is like an accordion. It's an absorption mechanism. And as much as we see the fraud, as Maria talks about, there's equal amount of fraud in crypto land as well. The risk systems are quite good. They're old. They're archaic. I get it. But I'm not defending TradFi in general. I've seen that system in action, you know, from a perspective of how it's done. Yes, it's designed. That system is designed on this older, what they call batch relay system, which takes time to catch up. But it's still there. My question was, if we distill the entire risk model framework into a signing ceremony, then I think we're doing disservice to the larger financial system. That's my point.
Fair point too. And the other point to that then, to build on it, is if the risk model is so good, or if it's adequate, then why are we here having this conversation?
I think it's more.
I didn't say that's adequate. I said it's right for the system that has been evolved over 100 years. My point is we need to build a newer risk model to the stuff that Maria and Jamal are talking about.
Exactly.
I absolutely agree on that too. Yeah.
That's what I mean.
And that's
I don't
where I was going.
Yeah.
It's so usually, like, I think those conversations about compliance are interesting because it's not about like we can prove something, we can deliver the compliance required. It's just like the mental model is different. And to follow up on what Jamal said, if we want to be able to be a merchant, and as the moment that I pay with my credit card and my payments, you can actually have the money like second later, buy a T-bill and make that working capital immediately, which is, I think, something Square has been trying to do for a couple of years. Like this requires like a new mental model when you do that on chain. And I think first how we explain, you know, like to a compliance officer or to risk manager, like how this is actually managed without having to tell them like, oh, you need to take a class on cryptography and learning, you know, like spending like 5 years in blockchain, like we're all like, or 10 years, like we all have did. And I think we've been also used to talk to within an engineering space and how we can bring that conversation to those people that are actually not technical, not part of the industry. I think that's going to be the unlock. And actually, I'm curious to see like how you handle that meeting, because you have like a lot of workshop with those, you know, you were in New York.
Yeah.
So
I do 8-hour workshops on these things now, to your point, and I'll tell you simple things, right? Like FFIEC in US Treasury. they have very specific guidelines on software supply chains and software updates, right? Which means that if you're financial institutions, you have to follow those guidelines because otherwise you have compliance risk, right? So in that context, the element of like, there's a presidential order during Biden administration to say every library that you're including in your infrastructure has to be accounted for. So if there's a breach in any of those libraries, we know the service requirements as a simple sort of method. So what we ended up doing, in other mind, we said, okay, fine, if that's the case, if we want to achieve the vision that Maria and Jamal are crafting for us, and Luke, you're working towards providing this super secure libraries, can we not do formal verification to know that this is the software that we agreed upon and this is the software that's running? So we are sort of closing the gap of that software. So that's one example of how do we address that. Another example is, can we use zero knowledge proof in an economic manner and using the NIST cryptographies that come in protecting that post-quantum cryptography infrastructure. So some of these things are there to give you the baseline infrastructure, which is secure, resilient, so that Jamal and Maria can do their thing. If they want to connect a transfer agency to a secondary market for recording ownership the moment that happens, for us to enable the compression of those market structure, you need to have the resilient infrastructure. That's my point. And that's the workshop. I mean, I've done this for like 6 to 8 hours. It's quite revealing, and it's exhausting too because there's just too much going on there. But I mean, I'll pause here.
I agree. I don't want you guys to think that we think, or maybe I think, that there isn't any value in traditional systems and how things have been done. Like we would be idiots to not like try to take over the 100 years of learnings that have been done over the last 100 years. And actually, that's why we are getting into the realm of regulated financial services, is because we think there's a tremendous value in the regulated space just alongside the blockchain space. But we think it's a slow, I'll use the word leakage, which probably doesn't have the right connotation here. It's like a slow leakage of like, let's tap into both realms and take advantage of both financial systems, risk systems, AML systems, whatever system you want to talk. Take advantage of those systems where it makes sense, but like spill that old archaic infrastructure, which you agree is old, archaic, and could be optimized. Take that and put it on supercharged rails, right? Like Maria talked about earlier, we think the blockchain is a superpower. Like it's literally a superpower for not only finances, but also financial infrastructure. So I agree that we shouldn't like throw out the old playbook. We should like take that. I mean, that's what every financial services iteration in history has always done, right? Like Venmo and Cash App didn't like say F Visa. They built a new system on Visa and they took advantage of all that infrastructure and they expanded it. And I think now like you see quite a bit more efficiencies on the Venmo and Cash App layers that sit on top of Visa and MasterCard, which allow people to move money much more freely than they did before and then settle to like Visa and MasterCard when they need to, right? Like Venmo's kind of a layer 2, if you want to call it that, right?
Yeah.
Like Venmo is like we're going back and forth. We're sending money. It's hyper optimized. It's much faster and much more efficient than Visa. And then when we want to, we settle to our bank accounts or we on-ramp from our bank accounts. That same infrastructure is being applied to the blockchain side. There's no reason why we shouldn't take advantage of the old systems where it is appropriate. I just think it's not as much as we think. Like, I think that like slowly over time, we'll be taking less and less and less and less infrastructure from these old systems because we'll take those best practices. We'll take those like the smart learnings and insights and moving it over to this new paradigm, this new purpose-built financial operating system that has given us the tools to do this at a scale that's never been seen before. Like it is undoubted that like the tools that the blockchain provides allows you to do everything end to end from a financial system better. It's just taking a while for us to set up the bearings and the infrastructure, the companies, the technology to get us to be in the same position. But it is undoubtedly a better purpose-built system for what we are trying to do.
I'll say one thing on that.
Yeah, go ahead.
Go ahead. So one thing, all of us, right, Luke, Maria, Jamal, we are selling to institutions, which means we have to have a sense of humility and appreciation of what they have. Because at the end of the day, whatever announcements you have made today is really to get institutions onto that alliance. But at another mind, we did this thing which makes it easier to explain all this complex conversation because this can get really complicated. Is the 3 I's. Like one is the infrastructure, which is essentially what we're building and onboarding clients and moving them safely to Onchain. What Luke is building is making sure that's further secure in terms of how we process transactions, which is signature-based transaction processing. Second thing is instrument, which is a token is a token is a token, but there's a there's a micro market structure for every token. So what you have done, the announcement with Apex, essentially is to amalgamate that layer to say, can I move the assets in a meaningful way in the right ledgers for recording systems? And the last I is insights, which is if velocity of assets improve, then you can't obviously use the old risk models. You have to rely on AI, because AI has the ability to look into mempools, look into the transaction pipelines, look into existing. So those three I's give us a clean way to compartmentalize all the conversation we're having, which helps us explain to financial institutions. I'll shut up now, but that's just high level.
I think Nitin, after what you just said, Jamal, it's like there is a quote. I mean, I'm taking a quote like Nadine Shakar said something in at Sibos, with Sergey last year. She said, "It's going to take us a while before in code we trust. We believe this is going to happen, but it's going to take a while because we're in the business of mitigating risk, and we have like a lot of control and a lot of like a safety that we need to apply. It's going to happen at a certain point, but it's just going to take some time." And I think it's exactly what you said. And I think right now it's the most exciting moment because we're really switching from the pure, everyone can put some asset on chain, if I may say so. But how are you going to start making money and actually enabling, like business to be done? And I think that's why you started, like when you started, Maria and Jamal saying this. And I think that's where we are right now in the ecosystem. And that's super exciting. And I guess that makes me think a little bit of like what happened with eea-eth, like last week, and the 50 million swap. I'm wondering, when we talk about connecting, traditional finance to DeFi, how you look into this and what this event, like, would say, like, inspired as a comment.
I mean, I don't know. I feel like we are, like, if you take a look at financial services and how long it takes to build out a system that truly people trust, like, we are so early in this like journey. And I think, to your point, like, we still don't have some of the protections and the infrastructure in place to prevent some of these even most basic things. Now, I think, like, we're figuring it out. Like, I'll say that we're moving at a much faster pace than any other financial services revolution in history. The first debit card or credit card, whatever you want to call it, was issued in 1966, right? And like, my mom is writing paper. My mom gave me cash today. I saw her today for lunch. Like, we're in the digital age, and my mom is giving me physical cash. So anyway, like, I think we are still so early. Like, it takes over 50 years for people to get to in code we trust, which I love, by the way. I love that phrase. I think that's perfect. But yeah, I think we will get to that point. I think, like, I'll say all of us are kind of like part of this like new generation, but like, we are all now getting comfortable with the idea of putting money on like plastic, putting money in like in whatever. And let's say we graduated from in paper we trust to in plastic we trust, and we're getting to in code we trust. And it's just like, we're so early in this like life cycle. We gotta be thinking on like a 20-year, 10-year, 50-year scale before we really start to see like actual markets move. And by markets move, I mean like actual infrastructure being developed to actually give people what they need to do this stuff like seamlessly. Like, I would say the same thing was true for all financial services revolutions in the past.
Jamal just said that he got lunch money from his mom. Is that right, Jamal?
Well, today's like a religious holiday for Muslims called Eid. So
happy Eid. Yeah.
Eid Mubarak to everyone. Yeah. So it's a tradition.
I thought it was yesterday. Yeah, but it's
it was technically last night.
Yeah, it was last night. Yeah.
Yeah. But my mom, no matter how old I will get, she will always give me Eid money, which is like
good on you.
Yeah. I'll try to put it back a million times. She would just not accept it. So yeah, I did get some Eid money from my mom.
I want to add like a really quick 2 points here. Aside from Eid, which is super fun, and I hope everyone's out there celebrating. But ultimately, like, the market is just moving super fast, and we're seeing validation announcements on a day-to-day basis where it's become like a land grab for stablecoin infrastructure or like robot money infrastructure, right? We saw like MasterCard acquisition with BVNK just yesterday, right? They got a like $1.8 billion valuation for like around $40 million in revenue. Like, that's mammoth. Like, good for them, right? But that is more of a signal from how MasterCard is viewing their future than what actual like the valuation is for some of these companies, right? And that is just the truth. So the facts are just out there, right? I think the rest of us in Web3, we're reacting to those facts that are present, right? Like the large financial institutions that you're referring to are just accessing players, and they are acquiring points for on off ramps. They're acquiring points for custody. They're acquiring points for the actual infrastructure. They are just acquiring what they need to innovate. A book that I often quote, and I actually have it on my desk because that's who I am, but it's The Innovator's Dilemma. And if you've not read The Innovator's Dilemma, everyone should go and read it. But it is kind of the manifesto that I live by when I look at which industry I want to go into next. I really think about technology in this landscape. And if you actually think about the financial institutions and kind of how they're inching towards where they want to be, they are faced with innovator's dilemma. There is a part of their business that is very, very well aware that they need to optimize their back end, their settlement layers. They need to optimize how their treasury and their assets are moved. They need to optimize how they service their clients. But the truth is, majority of their customers, their core customer base that pays for their bread and butter, that drives their stock price, is Jamal's mom, who's still using cash, right? And so for them to make that leap and innovate, it's going to be a slow and gradual grind. And that's why these acquisitions are happening. So we understand that. And then there's a world, the world that we live in, this audience, the people who are listening today, that world is building this infrastructure from the ground up. They are Web3 native companies that are building from the get-go on an infrastructure that is truly open, truly decentralized, has global access, that considers all of the market structure and risk management learnings that that our predecessors had in that old industry, and we're applying them in a more programmatic way in this infrastructure. That world is very fascinating to me because that really changes things. That optimizes how money is moved, not just for today and the next 5 years, but out into the future. This is going to be how transactions occur. And we say this a lot here at Polygon too, that like robots need robot money, right? Like if you believe in AI, this is a very tangential industry, right?
But aren't you all like, isn't Polygon, Jamal, you and Maria, aren't you trying to I get your point, Maria. Like Web3 is super interesting, and Web3 actually has lost some of its narratives for a number of reasons. Institutions are sort of driving the entire sort of both investment as well as transactions. Aren't you sort of all this announcement that you had? Isn't that gearing towards institutions? Isn't that what you're doing?
I mean, I think that I think the long term, and the reason why I personally got in the space is not about institutions. I think that you build products that are institutional grade by starting with institutions, and then you use the blockchain to democratize them. And I think you bring them bring them to the retail side, and that's why we're building just as much infrastructure on the retail side as we are on the institution side, because we think the two paths will converge. But you want to start with the institutional grade stuff because it's got the best infrastructure and the best bearings, and then you want to open that up to the popular market. And yes, like that's the neglected market. Like a lot of us has been doing this for a long time, and of course, like enterprises and institutions drive a lot of the volume. But I firmly believe that like long term, long tail markets will drive the majority of the user base and the volume, and like that's the market that everyone will learn to care about when they can see that it can be immediately tackled by using some sort of like blockchain based infrastructure.
Yeah, Nitin, we're doing both, right? Like I think we definitely we want to service those institutions to the extent that you guys are also speaking to them and trying to help them kind of figure out how do they upgrade their rails. Like we want to be part of those conversations. We want to provide that expertise. I would say that it's impossible to get Jamal into a meeting because most of his day is talking to exactly those institutions in trying to advise them on how to upgrade their infrastructure and service their customers better. So we want to be part of that journey. And then the other half of us is like to your point, Jamal, we're servicing kind of a new frontier industry that's like slowly evolving, that doesn't have access to the infrastructure that the institutions currently build. Like, I mean, you're forgetting who the user base is, right? When we're talking about retail, we're not talking about like the average retail consumer in America, right? There is a whole planet out there with people who do not have access to financial infrastructure the way you and I are referring to it on this call, Nitin, right? We're taking a very like local American first view, and here there's plenty of options.
I'm
There's a
not.
plethora
I'm
of
not.
options.
I've traveled
Yeah.
to like 90 countries to understand the impact of Bitcoin. 90 countries, like 90 in general. Like I've been to the remote place. I'm not arguing that. I'm just. My question primarily was is the financial modernization. So my perspective, and I generally don't keep my opinion on this element, is we are modernizing the financial infrastructure, but what you're building now gives birth to new asset classes, like ability for you to own your data and monetize your data. You're building the infrastructure for that world, but you have to start with ability for people to understand money, right? The way it's the construct as it is today. My thinking was that it's not. I'm not questioning any of the Web3 narratives. I come from the same world too, and I understand this non-American perspective, but the announcement that you guys had today was, I think, largely to attract an average user doesn't know anything about transfer agency or fund accounting. It's institutional narrative, right? Like, I don't think a Bitcoiner will care about transfer agency, but institutions do. This is your Apex conversation, right? Anyway, I digress.
Yeah. Again, my
Back to you.
answer
Yeah.
remains the same. I think there is like we're servicing all of it. Like this is we're not thinking of this in a narrow perspective. Like the sector that we're targeting is broad, right? And there are two elements being built concurrently, and they converge into like what we want to be, which is the chain where all money is being moved.
I mean, if you could bring these two together, from an infrastructure perspective, how
That's
amazing.
exactly it.
How
That was
amazing
like
would it
our
be?
mic drop moment. Like we heard it and then we could not unhear it. And now it's ringing in all of Polygon's ears. All 300 people are talking about this every day, all the time.
Well, that's where we got to even when we're building, right? So we wanted just a quick point I wanted to raise is regulators are almost like different chains. They will have different requirements and different ways to interface. But at a pure ethos, they're moving an asset from A to B, and they need to make sure it's done right based on their rules. So I actually quite I sit there and I look at this and go, is it the same between a retail and institution? I think institutions got more rules. A retail maybe has a lighter set or a different set of rules, but they're still doing the same action. They're moving from A to B, and it might be a trade, it might be whatever it could be. And so I guess my point of, could we bring it together one day? And obviously there is, it's probably a bit romantic to some degree, but I do think that as we innovate and bring this together, that a lot of I'm seeing the market, a lot of it is quite country focused. So if you're doing actions in certain countries, there's different ways to do it, even when, working in Web3, especially at an institution level. So that's been something that we've been taking into account in building our infrastructure, because at the end of the day, we want someone to be able to, that's part of the safety narrative that we have. Being safe isn't just technical. You want to be doing something and interacting in a country and know that you're not doing something wrong. Even, you're like, oh, okay, well, I'm moving assets from A to B in this region. It needs to make sure that this is actually happening with it. So yeah, I guess on that kind of, there's different layers, but I just wanted to highlight that as we kind of obviously want these things to come together to converge.
So Luke, I'll kind of send you our open money stack kind of broad thesis. It's on our website like a little bit after the fact. But what I want to kind of for you to take away from this is like the open money stack is a single API where like any enterprise, any FinServe, any human or agent can kind of connect and essentially access payment infrastructure in a global sense, right? So think about it like this. Imagine you're a company, right? When the internet was produced, right, any company could go on there and create a website and have a global presence, but you could not monetize your business globally. You had to do that on a phased scale out. You had to go country by country, region by region, in the US state by state even, right? And like go on and figure out, how do I sell my goods? How do I actually transact? How do I, have operations here? Imagine with a single API, if you could just go from like 0 to global distribution. Like that utopia is possible with what we're building.
Yeah, I think.
I am not, but yeah, Maria, I don't know if you can like close this out or wrap this up. But anyways, sorry guys, I love this conversation. It was such a good one. Like you guys, I have a ton of respect for everyone here. Thanks for having me. I got to jump. I'm sorry, but amazing conversation for sure.
Thank you very much.
Bye, Jamal. Take care.
Well, I think we could keep going on and on for like a long time. There is so many other topics we could discuss, about like shared identity, compliance, actually between different jurisdictions, what it does look like, even like KYC between different institutions, where there is many topics. But I would say like first, I want to thank you for joining today it was our first version of this. We're going to do it again. Really appreciate like your insight. And it's like a pleasure. I'll share with you also like some more information about the the stream, so you can repost that and you can extract different content. And also, of course, thanking you for being a member of the Enterprise Ethereum Alliance. We're gonna do more of those also in New York. Probably also more workshop. But thank you very much, everyone, for being here today. And I think I can say I was told that we had like about 1,500 people at a certain point on the stream. So I think it worked out pretty well.
Good.
Thanks,
Luke. Good to connect with you both. Thanks, everyone. Take care. Bye-bye.
Thank you. Bye-bye.